Hello, ladies and gentlemen. Happy New Month to you guys, and good morning, good afternoon, and good evening to you, depending on whichever part of the world you're tuning in from. I wish you love and blessings for this new month as we prepare ourselves for new trading opportunities and new perspectives to the market as the new month began. I'm so excited as usual to welcome you to yet another promising edition on the Forex Morning Mastery, which happens to be our mid-week review session where we come together to review how well this asset we are monitoring so far this week has been doing, and of course prepare ourselves for the today's London and New York session, and of course for the later part of the week. And so far this week, we have been monitoring three financial instruments, which includes the USOILSPOT, the GBPUSD, and of course my favorite, the XAUUSD, popularly known as the gold spot. And in fact, on all of these assets, we've done pretty well across board. Both the US All Spot is doing tremendously well at the moment. The JPUSD is doing very well, while the XAUUSD, which happens to be the most profitable asset on our watch list for the week, is doing very well as well. And I do hope you guys were part of these trading opportunities that we highlighted at the beginning of the week, and of course through the follow-up details I share on both my TradingView and Telegram platform. Today we are going to be delving into the chart one more time. In preparation for today's session, I've done a comprehensive analysis of the assets we are looking at, and of course today promises to be an interesting one, as everyone in the market has going to be looking forward to very significant US macroeconomic data today, which will be serving as a catalyst to push price in whatever direction it wants to be. And as always, we are going to be leveraging on our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. Now, before we go into the details, I would like to welcome the newcomers in the house, and I do know you may be wondering what this is all about and what is it that we do here during the Forex Morning Mastery. Well, during the course of the weekend, I usually share a couple of videos that highlight and detail my plans ahead of the new week. So the Forex Morning Mastery was born out of the necessity to do follow-up details on this asset 3 times in a week, that is Mondays, Wednesdays, and Fridays. So as technical traders, we gather here on these particular days, coming together as a community and engage in follow-ups and reviews of our current positions in preparation of both the London and New York session. My aim here is to equip you all with the knowledge and skills necessary to make informed trading decisions independently. And trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and utilizing the information you gather here to enhance your own trading decisions and strategies. So once again, I do welcome you all on board and encourage you to actively engage in the comment section. So with that being said, here we shall be diving right into the business. And as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And by checking on the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, most importantly, timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Well, so far this week we've not really had high impactful events so far this week. Mondays, Tuesdays, it was more of meteor economic features as market participants anticipate this major event coming up today. So based on the asset we are looking at, we will be focusing on both the United States and the United Kingdom economic docket. Now for today, Wednesday, May 1st, we have a bunch of high impactful events that we will be looking forward to, and all of which are coming in from the United States. Now, the first one on our list for today that everyone will be looking forward to is the ADP employment change. Now, this data here is considered to be a key significant event that is coming up in about 3 hours from now. So we need to mark out the timing of this. And this is a monthly report that provides an estimate of the change in non-farm private employment in the United States. Now, if the figure comes in higher than expected, it shows a healthier labor market, while negative figures may lead to concerns about economic slowdown and weigh in on the market sentiment. And all of this will rub off on the US dollar. Now, looking at the previous data here for the month of March, it came in at 184,000. Now, consensus based on what is on ground now are projecting 175,000 for the month of April. So we're looking forward to see what the actual data will be. So if it comes higher than expected, we should be expecting a positive traction in favor of the US dollar. Then the other event we are going to be looking forward to again is the ISM manufacturing PMI, which will be coming up in about 5 hours from now. And for those of us who do not know, the ISM manufacturing PMI measures the health of the manufacturing sector by surveying purchasing managers on various business activities in the United States. Now, anticipation of this data can be of a major influence on the market sentiment, as it provides insights into the economic expansion or contraction of the US. Now, this data here is usually placed on a scale of 0 to 100, where anything above 50 is considered to be an healthy sector, an expansion in that economy, while anything below 50 is considered to be a contraction in the manufacturing activity in the United States. Now, if we look at the previous data here, that is the one that came in for the month of March, we have a 50.3, a little bit higher than 50, while consensus economists and market participants are projecting 50 for this month, which is lower than the previous month. So from what we have on ground, there are signs that there wouldn't be really any movement in terms of contraction or expansion, as that sector is looking stable. So we look forward to see what the data will be like. Are we going to be having a surprise, maybe in the form of beyond expectations or below expectations? Let's see what will happen today on the ISM manufacturing PMI. This data here is coming in 5 hours from now, so you do want to be marking that out on your calendar. Now, the other event we are looking forward to is coming up much more later in the day. That's about 9 hours from now, which is one of the major highlights for this week, which is the Fed interest rate decisions. Now, for those of us who are new to this data, well, this data is an outcome of the Federal Reserve meeting where they decide whether to change or maintain the current interest rate, and this is due to various factors behind the scenes that guides this decision, which most importantly is the inflationary status of the United States. And from what we have been seeing so far, in fact, in the last 3-4 months in this in the US economy, inflation has been very sticky. But the CPI, in fact, the recent data, which was the US core PCE that came in on Friday, came in way beyond market expectations, further emphasizing the sticky inflation in the United States. Then on Wednesday, that was last week Wednesday, when we saw the GDP data, which came in below expectation, there was also the GDP price index, which details the pricing of goods and services in the United States, and that one also came in higher than expected at 3.7%. So for me, the path of least resistance at this point is to keep interest rate higher for an extended period of time. And in fact, this is what market participants are looking forward to, as everyone is projecting that interest rate will be kept unchanged. So we look forward to see what the data will be here. Are we going to have any surprises today? Which I doubt we will, but if we do, of course, we will be preparing ourselves to see, to participate in that traction that comes from this one. Now, interest rate being kept unchanged, the implication of this to the market is that it will be influencing borrowing cost. Of course, there will be high borrowing cost. It will affect the overall economic activity. However, this will also bring a positive window to the US dollar, as key players in the market, investors, will prefer to put their funds, their capital, in safe haven currency asset like the US dollar. So it's a positive thing for the US dollar if interest rate keeps remain higher for an extended period of time, as this will also curtail inflationary pressure in the United States. Then later on today, I think it will be happening simultaneously. That is the Fed monetary policy statement, which everyone will be looking forward to. And finally, about 30 minutes after that FOMC, the Fed monetary policy statement, we will be having the FOMC press conference, an event where the Fed chairman will be communicating the central bank's monetary policy decisions, economic outlook, and of course it will be answering questions from the media. And of course, its impact on market sentiment is considered to be substantial, as investors will closely analyze its statements and rhetorics for insight into the future interest rate changes and overall economic conditions. So this is one event everyone will be looking forward to today as well. So these are the high impactful event we are going to be looking forward to today. We have about 1, 2, 3, 4, 5. So I encourage us all to mark this out on our timing, on our calendar, or whatever we have, so that we can be around when these events are gradually coming near. And one thing for sure, we do understand that as technical traders, the anticipation of this event usually has a way of influencing the sentiment in the market, and this obviously will reflect on the chart as price action. So as usual, we are going to be sniffing back into the chart to look out for patterns and structures that we will be using to guide our trading decisions for today. And one thing I usually mention here is that major key players in the market, of course, have inner cycle in this department that will be releasing this news, this data. And due to this inner cycle information, they usually build up a position even before the event happens. And this build up of position evolves into structural patterns on the chart, which is what we are looking out for to decide if we are going to be buying or selling today. So with that being said here, let's dive right into the business. I see your comment, Torres Master. Good morning to you. Glad to have you around. It's really been a long time. Happy new month to you, and trust you're doing well. I'm doing fine. Thank you very much, Torres Master. So with that being said here, we shall be diving right into the business. And as usual, the first asset we are going to be looking at this morning is going to be the USOILSPOT. Now, on the USOILSPOT, we've had an interesting situation since the beginning of the week. Remember, at the beginning of the week, we were buying the USOILSPOT, and in fact, we saw price action climb about isn't it up to 60 pips thereabout before the bearish momentum came back to retest the structure. We had another buy position triggered, which unfortunately went into stop loss, as we recorded our first loss on the USOILSPOT until later in the day when price broke down the support line of that range. So let's quickly run through what really happened at the beginning of the week that led to the decisions we made. Now, before I go any further, I want to emphasize that this session I will only be deliberating on our execution time frame, which is the 1 hour time frame. Now, I wouldn't be doing a top-down analysis. If you do want to have an insight into the top-down analysis we did on this asset, we actually did one on Monday. If you missed out on that session, you can check the link right in the description box below to have an insight into what we talked about, how we identified the major trend, the key levels and structures that brought us into what we are seeing here on the 1 hour time frame. So at the beginning of the week, price action was more or less trading above the ascending trend line, which we identified on the 4 hours time frame. So this is the remaining part of the ascending trend line we identified on the 4 hours time frame. Now, in addition to this ascending trend line, at the beginning of the week, price action was confined within a range between our key level for the week, which is the $83 level, and of course the $82.70 area, to emphasize the prevailing uncertainty in the market at that point in time. And you know how we treat range bound structures. Whenever we identify them, we do exercise patience, waiting for the market participants to finally make a decision and of where they want to be going. So as a result of this, we either wait for price breaking down the support line to give us selling opportunities, or the breakout of the resistance line to give us an opportunity to buy. So at the beginning of the week, with a buy stop order sitting above the key level at the $83 area, we captured our first buy position. We saw price moved about 60 pips thereabouts, and I did inform us to move our stop losses, secure the position before the bearish momentum came in. And I can remember vividly telling us that in case that we missed out on that first position, we may see price come back to retest structure in an attempt to continue the uptrend, and this was exactly what happened. Price came back, retest the structure. We saw some buy pressure, we joined, but unfortunately that position went into a loss as we saw price drop to the downside. Now immediately this whole situation happened, I did mention on both my TradingView and Telegram platform that a retest of the structure will be welcoming selling opportunities. And look at what happened. Price initially moved about 60 pips one more time again before the bullish momentum came in. And on Tuesday's morning, I did updated us on my Telegram and TradingView platform that a retest of structure here will be welcoming more selling opportunity. And of course, the retest of that structure was in alignment with the descending trend line that was supporting price action since last week Friday, as you will see here. And you know how we treat our descending trend line. As long as price remains below them, we want to be looking out for patterns and structures that supports the idea of selling the asset. So we joined that bearish momentum then, and since that moment price action has been finding lower lows and lower highs. Then we also added multiple levels to maximize the potential of the bearish move. We added one at the $82.10. We also added another one at the $81.50 area. And for those of us who had capitalized on this opportunity, well done and kudos to you. So at this point in time, price action has moved significantly well in our favor. And as you all know how we do it in this community, we do want to be moving our stop losses right now to secure the current sell positions we have, so that we do not get so that in case we have adverse price movement, we will not be taken out in a loss on this one. So for me, I will be seeking that we move all stop losses right around the third entry at the $81.50 level, while giving enough breathing space for price action to move around. Now, with a well secured position at this point, what is going to be our next line of action? Are we going to continue selling the USOILSPOT, or are there chances that buyers could come in at any point in time? And for us to, before we go into the details of how we are going to be managing this position, let's quickly talk about the fundamentals behind the scenes that has been driving the market sentiment to the downside. Now, the geopolitical tension in the Middle East appears to be relaxing at this point in time, as the negotiation between Israel and Gaza appears to be having a resolution at this point in time, though it's still very skeptical. But there is easing tension at this point, which obviously has downplayed concerns as regards to oil disruption from the Middle East. Now, the growing speculation that the Federal Reserve may postpone interest rate cuts and maintain the current benchmark interest decision is going to be having a negative impact on the US oil spot as well. So everyone will be looking forward to what the interest rate decision will be today. Will it remain unchanged? Well, which is most likely. So it's going to be exerting somewhat selling pressure on the US oil spot, which has been doing in the last 48 hours. Now, why is that so? Well, the US oil spot is a US denominated commodity, and whatever happens to the US dollar will definitely influence what will happen to the US oil spot. Now, considering the US dollar maintaining higher interest rate, the value of US dollar will increase definitely. And when the value of the US dollar increases, those other currencies who want to purchase the US oil commodity will be buying the dollar at a very high price. Now, due to this high price in buying the US dollar, it will affect the demand, as demand will be reduced. And if demand reduces, what happens? Price will definitely drop. So this is one of the major reasons that has been influencing the sentiment to the downside on the US oil spot. Now, yesterday we also got the report from the American Petroleum Institute, API, indicating a significant rise in US crude oil stockpile, which was at 4.906 million barrels for the week ending April 26, which is in contrast with the previous week, which ended at 3.23 million. So now what does this simply mean? It means that there is not enough demand that eats into the supply, and when there is high supply, what happens? Price tends to drop. So these are the major factors that has been influencing the sentiment in this market as at this point in time. However, we cannot ignore the potential that the escalating tension in the Middle East will change swiftly in favor of the US oil spot. So we are going to keep that option also in open. So we are going to also consider the buying potentials in this particular market. So as it is right now, the path of least resistance is still looking bearish. However, we will still be looking forward to the EIA report, which is coming up, I think today or tomorrow, that will also give further insight into the stockpile in the US. So at this point in time, since the path of least resistance is still looking bearish, we'll continue to look out for patterns and structures that support the idea of selling. And do not forget, we have a descending trend line which has been supporting the bearish momentum since last week Friday, and as long as price remains below the descending trend line, we will continue to look out for patterns and structures that supports the idea of selling. So we may still see a situation where price could come back into the trend line. That is, if it breaks above the $81.50 level, we could look out for buying opportunities above the structure. That is, if you're feeling comfortable taking counter trend opportunities. But for me, I would not be taking any buy position unless that descending trend line is breached and broken to the upside. But if you are a counter trend trader, a short-term trader, you might be looking at taking this 90 pips move, which is quite significant anyway. And if price breaks out of the trend line, then we could be adding more buy positions for to our existing trade. So but for now, I still maintain a bearish bias, and in fact we have the lowest point right now, where in the last 2 hours price action has been oscillating around that area. So we have the $80.40 level, where I will be looking at selling again. So having a sell stop order below the structure will be welcoming more selling opportunities for us. Now, there are two ways to which we can capitalize on this opportunity, because I got a bunch of messages privately as regards to how to position yourself for next move. And I guess this is because you're new with us, but let me quickly state this here. Now, for those who are profitable so far this week, that is, if you have been part of this profitable journey, you can afford to place your sell stop order below that structure, as you have the ability to leverage on some of the profits you had made so far this week. Now, what this simply means is that we can afford to test waters below the $80.40 level to join the bearish move to the downside. And if it doesn't work out, we know that we are only risking some of the profit we made this week. However, if you are new with us and you're yet to take a position, or you are not in profit on the US oil spot so far this week, then you are advised to wait for confirmations in the form of a retest of the $80.40 level before jumping into any sell position. So you can see the difference in the approach we are adopting in joining any bearish move at this point in time. So this is my simple view on the US oil spot. We maintain a bearish bias today. The only condition for me that will make me buy the US oil spot is for this descending trend line to be breached and broken to the upside. However, if we notice any form of reversal pattern around this area, maybe it could come in the form of a double bottom structure, head and shoulder pattern, whichever case it may be, even before the breakout of the trend line happens, we could still join an opportunity. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So this is my simple view on the US oil spot for today. I encourage us all to mark out this level. It appears this sell position has just been triggered right now at the $80.40 level. Let's see how far this momentum is going to go. So if you have any questions whatsoever as regarding the illustration I've made so far, feel free to drop them in the comment section. Trust me, I'm here and willing to be of help in that regard. Now, if you have found this content so far helpful in making your independent trading decision, I'll really appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the community to grow and also allows the YouTube algorithm to promote the video to a wider audience of traders who may find this content beneficial to them. And thank you very much as you do so. So let's make the like tally with the number of people on board, and thank you very much as you do so. So see you in about 10-15 seconds while we wait for any questions at all. All right. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, let's move on to the next asset on our watch list. Stay tuned in. So the next assets we are looking at this morning is going to be the GBPUSD, and what a phenomenal week we've had here on this particular asset. We had the privilege of buying at the beginning of the week. We had a stop loss following the buy, and then we had a sell position trigger, and at this point in time, price action is gradually heading close to my stop loss at this point, as we have seen buy pressure resume in the market in the last couple of hours. Now let's quickly run through what really happened at the beginning of the week that led to the decisions we made in this particular market. Now at the beginning of the week, it was more of a strong bullish momentum. The week started on a strong bullish note, and remember that price action was still trading above the ascending trend line we identified on the higher time frame, which further buttresses the bullish idea we had at the beginning of the week. Now, in addition to this ascending trend line, we had a range bound structure where, in fact, it was a wide one. As you will see, price started the week around the 1.24800 area, and as soon as price got into the 1.25480 level, we began to see selling pressure. And about 8 hours following the retest of the 1.254, we were able to notice a range bound structure as price action was consolidating and confined within a range just exactly around our key level at the 1.25350. And you know how we use our key levels in this community. It serves as a yardstick for the week, where when price remains above the key level, we look out for buying opportunities, and when price drops below our key level, we want to be looking out for patterns and structures that support the idea of selling. Now, due to this understanding, we had a buy position triggered, had the breakout of the key level at the 1.253. In fact, we had two buy positions on Monday, I think about an hour or two before the New York session began. We had another one at the 1.25480. So we had price move the first position about 35 pips. The second position moved about 25 pips thereabout before the bearish momentum came in. And if you had moved your stop losses accordingly, you must have been taken out with a modest size of profit. Now on Tuesday, I did mention in the early hours of Tuesday, I did mention that price action is back into our entry point, and then we will be buying again with the hopes that this will be a retest of the key level that was broken to inside an uptrend move. And of course, we did join that move, but unfortunately, though the first position closed at break even, the second position went into a loss. And since that moment, we begin to notice that the pound sterling was reducing in momentum, as you will see the appearance of a lower high. So you can see the highest point for this week was around the 1.257, and the second attempt by buyers to break out of the previous high failed. As you will see, for about 4 hours, price was unable to break out of the previous high, leading to the appearance of a descending trend line, which was serving as a yardstick to guide selling opportunities going forward. So as a result of this, I personally missed out on the breakdown of the 1.25350 because I was still doubtful that price could still go up. But I did mention in my commentary that we are going to be joining the breakdown of the 1.252, and I do hope you guys join that momentum, as we saw price moved about 55 pips before coming in around 30. So currently our first buy sell position is running with about 30 pips, while the second sell position is currently running in a loss of about 11 pips. So we have a P&L of about 24 pips in profit thereabout. So my stop loss for me is somewhere around the 1.25 area, which lines up with our trend line. So I still look forward to a bearish bias in this particular market. Now, what has been driving the sentiment in the market, which is very, very obvious, we have been talking about this all day, as the Federal Reserve is widely anticipated to maintain interest rate at their current level, which obviously should be in favor of the US dollar. And of course, the hawkish remarks from Federal Reserve in recent time has been supporting the idea of maintaining interest rate due to the sticky inflation in the United States. Now, on the other side of the pond, we have a dovish stance from the Bank of England, which obviously has incited the selling pressure we've been witnessing in the last 48 hours. Now, the Bank of England governor expressed confidence in managing inflation in the United Kingdom and says that inflation is gradually thinning out, and he foresees expectations of interest rate cuts as early as the month of August of this year. Now, for me, this is a dovish stance, and this might not favor the GBP, the pound sterling at this point. So the path of least resistance for me is still looking bearish. And please remember that for those who still have a sell position running, kindly move your stop losses. I have mine around the 1.25 area. Let's see how the market will react. So I still look forward to more selling opportunities. So guiding today's trading decisions, we are going to be using that descending trend line we projected here since the beginning of the week. So as long as price still remains below this descending trend line, we are going to hold on to a bearish bias. Now remember that we have this ascending trend line which we highlighted on the 4 hours time frame. Now see what happened here yesterday during the later part of the New York session. We saw price break down that ascending trend line, which technically and from a theoretical standpoint supports the idea that sellers might be taking over the market anytime soon, as the ascending trend line has finally been broken. Now look at how the ascending trend line shares a beautiful confluence with that descending trend line right here. And we all know from a technical standpoint that when price breaks down a key structure like the ascending trend line we have here, there are chances that price action may come back to retest both the ascending trend line and that descending trend line, where the inability of buyers to break out of the ascending trend line would be a beautiful signal to join the downtrend continuation. So if this bullish momentum continues, taking us out of the current sell positions we are going to exercise patience and wait to see how the market is going to be reacting to those trend lines around the 1.252, which will be determining if we are going to be buying or selling. Now, if selling pressure persists below the structure, that is, buyers are finding it difficult to climb back above the ascending trend line, then we'll have no other choice to look out for patterns to sell. And in that case, we may be looking out for double top structures, head and shoulder patterns around this area to join the downtrend move. However, if price action breaks out of the trend line and climbs back above the ascending trend line, which is exactly around the 1.252 area, we will be keen on joining an uptrend move. So that's the condition that will make me buy this asset today. Now, what happens if price does not get into the 1.252 or any of these trend lines, well, and continues to drop to the downside? I already have a sell stop order right below the 1.248 with the hopes of joining the downtrend continuation, and then we also have another positioning right below the 1.245 to maximize the bearish move. So this is what I will be looking at today. The path of least resistance is still looking bearish, whereas the only condition that will make us buy is for the ascending trend line and that descending trend line to be breached and broken to the upside. But trust me, I will be with you in the comment section of both my Trading View and Telegram platforms to give you updates as at when due. So this is my simple view on the GBPUSD. I encourage us all to mark out those trend lines and levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So if you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move into the final asset on our watch list for today. Stay tuned in, guys. All right. So, in the absence of no questions, I'm of the opinion that we are all on the same page. And in that regard, we shall be moving right into the final asset on our watch list for today. And please do not forget to click on the like button. For those who are click on the like button, thank you very much. I really appreciate your support. And for those who are yet to click, this is the cheapest way you can actually support this community to grow. And let's make the like tally with the number of people on board. And thank you very much as you do so. So moving on to the final asset on our watch list. So the final asset on our watch list for today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And in fact, the XAUUSD happens to be the most profitable asset on our watch list for today. Sorry for that break. So the XAUUS has been the most profitable asset on our watch list for this week so far, as we currently have a minimum of 5 active sell position running into a total profit of over 800 pips in profit. And for those of us who were part of this profitable journey, well done and kudos to you. So let's quickly run through what really happened this week, what led to the decisions we made to sell the XAUUSD. Though at the beginning of the week it was not all of roses at all. Remember, we were buying at some point. We had a stop loss incurred at the beginning of the week, but thank goodness, it's always good to stay faithful with our analytical approach, because I know at some point we will recoup the losses we incurred, and of course made some more profit on top of it. And we've done this time and time over and over again. So let's look at what really happened at the beginning of the week. Now, for those of you who missed out on my weekend video where I did a top-down analysis on the XAUUSD, kindly check the links right in the description box below. You have a well-detailed understanding into what happened on the higher time frame, and of course you can use it as an educational tool in understanding how to use price action. So at the beginning of the week, we had a very beautiful downtrend continuation pattern. If you remember, we were seeing something like a flag pattern following the strong bearish impulsive move we witnessed a couple of weeks ago, as we saw price transition into this old flag pattern of a thing. And due to this observation, we were already considering that price will continue the downtrend, and as a result we were preparing to capitalize on that opportunity. But while we were preparing for this downtrend scenario, we were not ignoring the potentials that buyers could also come in. We all know that it is not all the time that theoretical patterns follow the market expectations. So we kept that in mind, and as a result of that observation, we were able to identify a range bound structure where price action for the first 12 hours of the week, price action was confined within the $2,336.50 level and the $2,320 area, just right below our key level situated at the 2,350. Now, you know how we do it whenever we have this kind of range bound structure. Despite the fact that we have a downtrend continuation pattern, we waited for buying opportunities above the resistance line. So we capitalized on this one. We had a breakout of structure. Price moved about, how many pips was that? Moved about 100 pips thereabout before the bearish move came in. Though we had our stop losses moved, we had some moderate size of profit on that one. Price came back to enter again, but that did not do very well as it went into a loss. Now moving on Tuesday, we were positioning ourselves. We had this whole structure marked out at the beginning of the week. Remember, we had the support line of that range bound structure I showed you earlier, which was at the 2320. Now before I go here, I already sold before the breakdown of 2320. Unfortunately, I did not share that update. I don't know what happened. But I did not share that update. So I sold around the 2327, and then we had stop losses below the 2320. And remember, I kept on adding multiple levels for us to maximize this move, as we had a 2313 level marked out on Tuesday. We joined this one, we joined the 2305, and we joined a couple more, the 2003, $2,293.50 level. And as at this morning, I added another level, had a $2,283 area, which is yet to be broken to the downside. So far we have a minimum of 5 sell positions running with over 800 pips in total profit. And for those of you who did join this profitable journey, well done, and kudos to you for being faithful to our analytical approach. Now, as it is right now, price action has moved significantly well in our favor. It is high time you want to be moving your stop losses to secure some profit. I hope you have done that, but if you are yet to do that, please do that right away, as you will see that throughout the Asian session, price was unable to break through this area, and we may likely be seeing a reversal setup build up ahead of today's US macroeconomic data. So it's important we move all stop losses. Let's secure the current sell position. So anywhere around the fifth entry here seems most appropriate to move all stop losses to. And please remember that we want to be giving enough breathing space for price action to move around. Now, with a well secured position, what are our plans for today? Well, it is not news that the downtrend in the XAUUSD dollar is due to the renewed buying of the US dollar following the hawkish sentiment in the market as regards to interest rate decisions. So it is no news that interest rate may likely be kept unchanged, and this has further bolstered the US Treasury bond yield, with in turn which has dovetailed to a positive traction in favor of the US dollar. Now, another thing that could also influence the market is the US ISA manufacturing PMI, the ADP employment change, which is coming up much more later today. And like I do tell you that major key players in the market usually have inner cycles within those departments that gives first-hand information to them. So prior to the event, they gradually build up a position which usually reflect on the chart as patterns and structures, which is what we retail traders want to be looking out for, so that we can join the trail they have left behind. Now, if we look at the current market structure at this point, ever since price action tested that lowest point for this week at the $2,283 area, we have noticed buy pressure as sellers have been finding it difficult to break through this area. Now, will this whole structure transition into a reversal setup that could lead into buying opportunities today? Well, we don't know yet unless we see confirmation happen. Now, another thing I would like to emphasize here is that the current market outlook is still looking bullish. Let's have a glimpse into the higher time frame here. So you can see the current outlook is still looking very bullish. It's still a very strong bullish uptrend scenario. However, I still think that if price breaks down the 2,275 area, we will be in for a massive sell to the downside. And my TP target for this current sell position is still within the extension of the previous impulse leg at an area between the 127.2 and the 1618, which we still have a room of about 600-700 pips to catch here if price continues to the downside. So I still maintain a bearish bias here, but we never can tell. Buyers may come in at any point in time to just do a retest, a retracement of the bearish move that started this week. Now look at this area. This area has been a strong memory for buying power in the past, and you can see consolidation phase happening around this particular area. So we cannot ignore the potentials that buyers can come in at any point in time. So scaling back down into the 1 hour time frame, our center of focus for today's trading session will be between the 2000 hold on a second please. I would like to mark out some levels here ahead of, so I'm trying to look out for psychological levels. So let's look at 2289. all right, I will be sharing with you why that is in a moment. Hold on a second. So we have let's label it 2289, right? So you want to be marking that out on your chart right now. So we have 2289, and if price action can break out retest of that structure, then we may likely be seeing a reversal setup evolve around this particular area. Now the inability of sellers breaking through the 2283 could incite a bearish opportunity, a bullish opportunity. So what I will be looking out for, not only a breakout but a retest of structure, giving me confirmations that buyers are getting stronger, then we can join that uptrend move. Then we shall be using that same level that guided the bearish momentum to capitalize and maximize on the uptrend move. But trust me, I will be with you in the comment section of both my trading view and Telegram platform to give you update as at when due. And in fact, if you are going to be part of the XAUUSD live window coming up later today, then you will be having the privilege to see real time how we manage our position. So at this point in time, a breakout retest of the 2289 level will be giving me a reversal setup to join an uptrend move. But if this does not happen and instead price action continues to drop to the downside, well, the breakdown of the $2,283 area will be welcoming more selling opportunities for me. So this is my simple view here on the XAUUSD. Our center of focus for today's trading session, prior to the New York session and London session today, is between the 2283 and the $2,289 area. Is a $6 range bound structure where, depending on the direction of the breakout, will be giving us an idea of where price will be going today. So mark out these levels and let's see how the market is going to be reacting to this current structure. So this is my simple view on the XAUUSD. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever before we start rounding off on today's Forex Morning Mastery. Stay tuned in and do not forget to click on that like button. Your likes are valuable to me and it goes a long way in helping this community to grow. Thank you very much as you do so. Alright, so in the absence of no questions, I guess we have come to the end of today's Forex Morning Mastery session. It has been a wonderful moment with you guys. I really appreciate and enjoyed every single moment with you. And of course, I'm excited. It has been a profitable start to the week for us. Let's see how the remainder part of the week is going to behave. Are we going to replicate the same scenario we had during the first half of the week and maximize the profit we've had on all of the assets. So far this week we have been monitoring three financial instruments, which includes the USOILSPOT, the GBPUSD, and of course my favorite, the XAUUSD, and all of which we were able to identify simple trading setups using our basic tools such as trend lines, key levels, and chart patterns to strategically position ourselves for the next move. So I do hope you guys marked out these levels accordingly. If you have done so, well done to you. All we need to do now is exercise patience and allow the structure to mature. And always remember, every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, let's ensure to have a well-defined risk management strategy in place. Now, for those of you who are joining us for the first time, you are highly welcome. I do hope you are able to gain one or two things from what we discussed here today. And if you did, you want to be part of our subsequent editions, as the more time you spend with us in this community, the better you get to understand our analytical approach, which eventually will help you in making independent trading decisions. So I look forward to seeing more of you same time on Friday, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have done so far this week, and of course prepare for the final trading day of the week, where it is expected that market participants will be rounding off their trading activity ahead of the weekend. And of course, this exercise usually brings in some significant traction, which we do want to be on standby to capitalize on. So I look forward to seeing you same time on Friday. And it's on this note I would like to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful day, everyone. And happy new month to you all, and we shall always see in the comment section of both my TradingView and Telegram platform. Do have a wonderful evening, everyone. Bye.